Africa's fintech revolution is rewriting the continent's economic story. From Lagos to Nairobi to Cape Town, fintech startups are redefining how people transact, save, borrow, and invest. With millions of unbanked citizens gaining access to digital finance, the sector has become one of Africa's most exciting frontiers for innovation and investment. Yet, beneath this growth lies a critical question. How do we ensure that fintech's expansion is sustainable, transparent, and trusted? That's where regulation and governance come in. Two forces that, when balanced correctly, can enable Africa's fintechs to thrive responsibly. So this leads to what we call the difference between the growth story and the regulatory lag. Africa's fintech market is growing faster than most regulators can keep up. Between 2017 and 2023, fintech investment across the continent exceeded $6 billion, with Nigeria, Kenya, Egypt, and South Africa leading the charge. The sector now spans everything from mobile money and digital lending to neobanking, insurtech, and blockchain-based payments. However, this rapid growth has outpaced regulatory readiness. Each country has developed its own approach. Kenya's central bank regulates digital lenders, South Africa's FSCA oversees payment institutions, and Nigeria's CBN issues specialized fintech licenses. While diversity reflects rural realities, it also creates fragmentation, confusion, and uneven levels of protection for consumers and investors. In many cases, fintech startups face uncertainty. Regulations change midstream, cross-border licensing is complex, and compliance costs can be prohibitive. This environment can stifle innovation or push operators into gray areas. The solution isn't to slow innovation, it's to strengthen governance frameworks that allow growth within guardrails. Governance is clearly the missing link. For fintechs, governance is more than board meetings and compliance checklists. It's the backbone of sustainable innovation. Effective governance builds investor confidence, guides ethical decision-making, and protects consumers. Unfortunately, many fintechs adopt governance late in their growth journey, often after raising external capital. Without formal governance, founders face risks such as weak internal controls, poor data management, and regulatory non-compliance, all of which can erode trust. A strong fintech governance framework should include board leadership oversight with independent directors and risk committees. For an example, regulatory compliance embedded from product design, which is compliance by design, means that data protections, cybersecurity governance aligned with laws like POPIA, South Africa, or NDPA for Nigeria, and Kenya's Data Protection Act are implemented quite early on. Transparent reporting to investors, partners, and regulators is something that should be standard. Good governance doesn't constrain innovation, it amplifies it. It allows fintechs to operate confidently, attract institutional investors, and engage regulators from a position of credibility. So, what is the evolving role of regulators? Regulators across Africa are adapting, though unevenly. Some, like Kenya and Nigeria, have introduced regulatory sandboxes, controlled environments where fintechs can test products under supervision. Others, like South Africa and Ghana, are refining licensing frameworks to include digital banks and payment providers. The goal is not heavy-handed oversight, but collaborative regulation. Forward-looking regulators see themselves as enablers, not enforcers, working with innovators to protect consumers whilst allowing competition to flourish. One thing that could really help is regional harmonization, and this also holds promise. Initiatives such as the Pan-African Payment and Settlement PAPS and the African Continental Free Trade Area could benefit from aligned fintech regulations to ease cross-border payments and investment flows. And everyone should be looking towards responsible innovation. Africa's fintech story is still being written, and its future depends on trust. Building that trust requires fintech to adopt governance structures early, regulators to provide clear and consistent frameworks, and investors to reward accountability as much as innovation. The challenge is to avoid this false choice between growth and governance. The two are not opposites, they're interdependent. Fintechs that embed governance and regulatory discipline will not only survive but lead Africa's next wave of financial inclusion and digital transformation. Fintech regulation and governance are not roadblocks, they're building blocks. As Africa's digital economy matures, the winners will be those that innovate responsibly, those who see governance not as red tape but as competitive advantage. If Africa's fintech ecosystem can strike that balance between creativity and compliance, innovation and integrity, it will not only change how the continent banks, but redefine what responsible digital growth looks like globally. Contact us for more discussions along this.